I'm Charlotte McLeod with investingnews.com, and here today with me is Peter Krauth, editor of Silver Stock Investor. Thank you so much for being here. Great to have you.
Thank you, Charlotte. Always a pleasure.
Very good to be speaking with you. And I had questions all ready for you, but then I saw the title of your Metals Investor Forum presentation, and I'm just going to check my notes so I get it right. It's silver, the new oil, the next uranium. So I hoped that we could begin there and just unpack those lofty claims there.
Sure. So, I mean, that's really the shortest way I can summarize how I feel about silver right now. When I say it's the new oil, I feel that silver, because of its role, its existing role, growing role, underappreciated and underestimated role in solar panels, it has become or is becoming the new oil. And by 2027, the International Energy Agency forecasts that solar will actually outpace coal and natural gas and become the single largest source of power worldwide. So that's a big thing, and it needs silver to power solar. So, and the second part of it being the next uranium. At the end of my presentation, I have a slide that compares silver to Bitcoin and to uranium, and I say silver is a patience trade. And if you look at how Bitcoin and uranium behave, they go through these extended periods, sometimes years at a time, where they really just consolidate. They don't do much of anything. People get tired and bored and move away from them. And then all of a sudden they explode. And you can't really forecast very easily when that's going to happen. I believe the best way is to be in the trade, arm yourself with patience, know it's going to be like that, or it could be like that for a while. And then you're there to benefit when it does. And it will come. It absolutely will.
Okay, there's a lot of points that we want to follow up on there. And I think where we'll go first is setting the stage a little bit in terms of what's going on with supply and demand. So I believe back in November, the Silver Institute was calling for a 2023 deficit of 140 million ounces. So do we know how that actually ended up shaping up?
We do. It ended up being 194 million ounces. So that was about a 30% underestimation. So, and there's been a bunch of surprises in that respect in terms of how 2023 turned out. And in that presentation, I have a slide where I talk about, silver realities in 2023. They had forecast that overall supply would be up 2% between mining and recycling. It turned out it was down 2%. I'm trying to remember all of the categories. So I had industrial demand. They thought was going to grow 4%. It ended up growing 8%. The demand from solar they thought was going to be about 140 million ounces. It turned out to be 190 million ounces. And then the deficit for 2023 was forecast at, I think, about 140 million ounces, and it turned out to be like 194 million ounces. So some misses all across the board. It all really tells me that it's hard to, obviously, forecasting is hard, especially about the future, but in silver especially. And I think that it's just been, the surprises have been to the upside. That's really, the conclusion I come to.
Okay, so that gives us a look at 2023, and now looking forward to 2024. Silver Institute is looking at demand of 1.2 billion ounces, second highest on record, I believe. And then what's interesting, I think, is that strong industrial demand, once again, particularly solar, as we've been talking about, but then projected 4-year low in physical silver investment demand. So can you unpack those?
Yeah, absolutely. So let's start with the quote-unquote bad news, and I'm not sure it'll end up starting that, playing out that way, but investment demand was outsized because India had underinvested for a couple of years after COVID. Had actually overinvested after COVID, and then pared back for a year, and then that is likely to come back. So I think that it's going to probably end up being an underestimate as well in terms of what's going to drive what final numbers are going to be like for investment demand, and what will drive that. And then when you talk about industrial demand, I think that so it's interesting to note that if you just look at this solar in particular, solar was about 100 million ounces 4 years ago. It was 190 million ounces last year. Silver Institute forecasts over 200 million ounces next year. And so that's more than a doubling in 4 years. It's tremendous. And the demand for solar has become something like 20% of all industrial demand. It's it's now 30% of industrial demand. Industrial demand has grown to over 600 million ounces a year, and so solar now represents almost 20% of every ounce of supply every year. That's why I say it's the 800-pound gorilla in the silver space.
I think that's a nice way of putting it so you can visualize exactly how that looks. So supply and demand, really important to look at. I also wanted to talk about the Fed, though. And back when we had our last conversation, it still looked like we might get another hike or two. We talked about the possibility of something breaking. Now it looks like we're in a different situation where we're waiting for them to come back down. It doesn't seem like anything has broken, at least on the surface. So what are you seeing?
I mean, I think that we've become maybe a little bit comfortable and complacent. I think that we're underestimating the risk of a banking crisis resurfacing as an example of some kind of a black swan, quote unquote. There's probably a number of these kinds of risks out there that we're underestimating and not accounting. I mean, obviously, the definition of a black swan is that you can't predict it. And I'm just saying that what we do know is that we can expect them. We may not know what they'll be, but we can prepare for shocks of that kind. And I think that's where I think the market has gone probably wrong, in the sense that the market hasn't priced in the higher level of risk of some kind of a shock of some kind. And banking crisis is just one example. I think that's one of the ones that you maybe kind of more predict and prepare for, perhaps, in some ways. And we've seen that with a couple of banks in the U.S. Being downgraded just in the last few weeks or so. So that really has not gone away. They are struggling. We know real estate is struggling from higher interest rates, and something's likely to break.
Another concept that we've talked about before together is this new inflationary age. So curious to know about your outlook for inflation as we head forward into 2024, because that's also a part of the precious metal story.
So when we hit recession, because I do think that is likely to happen, we could get, because that'll likely cause things to slow down, at least for maybe a quarter or two, slow down enough that we could get somewhere sub 3% in terms of 3% in terms of inflation. I doubt very much we'll get much below that for very long. 2.5% would pretty much be the limit and would surprise me. And I really think that we are going to continue in this inflation decade. Around 3% still it's really sticky around that level. You look at producer price index, you look at personal consumption expenditures, which is the version of inflation that the Fed likes to look at. And these numbers are staying higher. And at 3%, even on the CPI, that's still 50% above their stated target of 2%. I really think we're going to end up at some point where the Fed and central banks around the world that have picked this arbitrary 2% level are going to have to reevaluate. And they're going to probably admit that their new standard is going to have to be somewhere like 3%, and that'll be the new normal.
Okay, I think we've covered a lot of the dynamics behind silver. Not absolutely everything, because there's a lot we could talk about, but we've got a good picture of what's going on. And I know that one topic that you really want to cover is why is the price not going anywhere when we have all of these factors, especially for me, the big deficit. So can you give me your take on that?
Yeah, so let's set the stage a little bit. We've had, as you mentioned, 4 years consecutively of deficits. And if you add up the 4 years, right, something like more than 600 million ounces of silver in these 4 years in deficit, which is about 60% of a single year's supply. And yet silver price has gone sideways for about 3 years. And so you have to ask yourself, well, how and why is that happened here? And sort of, for your viewers to understand a little bit, you've got sort of three aspects to this. You've got industrial demand, where industrial supply, this goes to users that make solar panels, that do the electronics, all sorts of things like that. You've got the investment side of it, so people were actually buying physical coins and silver. And then you've got sort of this area where when there is oversupply in a given year, that gets shunted into the inventories of things like the futures exchanges, ETFs, for example. And so I believe what's been happening is that in the last 3 years, and when you look at the inventories in these exchanges, the major exchanges are the COMEX, the LBMA, and Shanghai. And so when you look at the inventories in these exchanges, now first let's look at overall inventories, and because there are categories. Overall inventories are down about 30 to 40%, which is really quite impressive enough on its own. So silver has been drained out of these inventories. I call them secondary inventories. Now, when you look at these exchanges, they've got what we call registered inventories, and it's actually the registered inventories that are the ones that are available for delivery. So here's my take. I believe that you have numerous industrial consumers buying long futures contracts and or buying silver ETFs, and then asking for delivery. When the futures contracts mature, they can stand for delivery, and they're saying, thank you very much. Now that my contract has expired, here's where I want it delivered. I'll pay the fees. I'm happy to take it. And they get silver at almost spot price. And then you have the ETFs, for example, where they could be buying the ETF, and oftentimes the bar is pretty high. You might have to earn, say, at least $1 million or more units in this ETF. That's obviously not a problem for a lot of these large consumers. So they can buy the ETF and ask for physical metal at any point in time. It might take a few weeks or a month, and they'll get their delivery. Right. So I think that, by the way, the registered silver, so the silver that's actually available for delivery in these exchanges, is down about 70% over the last 3 or 4 years. So what's available for delivery is down more than the second overall on these exchanges. I believe that's where they've been getting silver for the last few years to meet that demand. Nobody knows exactly how much of this. You can look at what the exchanges have. Beyond that, there are probably inventories. You could consider some recycling, for example, and when you could consider some privately owned silver bars and anything else that people will sell at higher prices. But you have to believe that is access to this kind of secondary supply and inventory is only going to last so long. If I had to guess, I would say maybe a year, 18 months, 2 years max. And at some point, there will be no more secondary silver available. Someone's going to stand for delivery on a futures contract, and they'll be told, sorry, we can't deliver. We're going to have to, force majeure or something. We're going to have to pay you out cash. And so that's when I think that the entire sector is going to wake up in a big way. It could, I'm not saying silver can't rally for different reasons before that, but that kind of event would be a major shock to the industry. Like I could get to see silver spike $10, $15 almost on an overnight basis.
Okay, that was a very good explanation. So these entities, they're taking delivery of their silver. At some point, we hit a point where they can no longer do that, and we don't know when that is, but this is how it's shaping up. Okay, and with that in mind, you just told us that we don't know when that will happen. But if we look at 2024, maybe we take that out of the equation and we think about that could happen at some point. What do you see coming for the price this year?
Silver follows gold. I don't think that's going to change a whole lot. What we've been saying, a lot of people who follow this space have been saying that silver is likely, or gold is likely to move when the Fed. Gold's held up because rates have not been hiked anymore. So we've probably reached a plateau. So silver's held up because gold isn't that. It's likely that gold start to run when we start to get around. The market sniffs out that we're getting rate hikes. Silver tends to follow. I expect it will follow with a lag. If there's a black swan, that may be out the window completely, and silver could just run with gold and spike at the same time. But if it follows sort of the normal pattern of waits for gold to run, and gold runs because of rate cuts. So I would see silver maybe only really starting to move later in the year. What I do want to point out, and I have this in my presentation as well, and I looked at what inspired me was I looked at a chart of gold and how gold does during rate cutting cycles, a peak in rates and then cutting cycles. And actually, if you look at gold, the moment rates peak, it actually starts to do well when rates peak. You don't even have to wait for the cuts to start. So the lag in silver is that silver starts to run once they've started cutting rates. So it takes a little bit longer. And I looked at in the last 3 rate cutting cycles, I started counting from the time silver started to move up. And it was about halfway through the rate cutting cycle. What astounded me was that if you looked at just the average of the last 3 rate cutting cycles and you waited for silver to start to go, it was actually up on average 413%. So there's a lot to look forward to when, and assuming history repeats, there's a lot to look forward to in silver when the trend actually does start printing rates.
Okay, so certainly I think we can see the case here. Look, very compelling, and you've told us we need to be patient. So I guess my question is for you. How are you handling your portfolio right now? How are you positioning? Are you fully positioned? Are you still looking for opportunities?
So I'm always looking for opportunities, and I'm actually finding some, certainly because the market has been tough on a lot of companies and they've gotten almost, undeniably attractive. So what I'm doing is, and this is not magic or anything, but focusing on companies that ideally are well cashed up, and you have several that are well cashed up, that are executing, well cashed up because they were either lucky or smart and positioned well with cash going back as far as 18 months or 2 years ago. And so they've been disciplined about spending that cash. They can continue for another year to 2 years, probably on the cash that they have. So the second focus would be, with that in mind, companies that have projects of both scale and grade that also have the nearby infrastructure that, if something of size presents itself, the size and quality, it could ultimately be developed. And then finally, looking at what I believe is maybe the sweet spot right now, in fact, about developers and growing producers. And so you've got some of these companies are having, surprisingly, I guess for some, no difficulty raising money, which is certainly a scarce commodity in this kind of environment. But it's absolutely true from what I'm seeing, and I'm told when I speak to the management of these companies, they're absolutely having no trouble at all. In fact, some raises are oversubscribed. Some of them are filled in a matter of a day or a couple of days. It's impressive, but it's not the norm. But it speaks to, I think, the quality of those companies. And those are the ones that even if someone wants to get into a financing, they can't pay attention to that company, because the fact that they were able to fill that financing so quickly is a clue that the market likes it, and there's probably something there. So fascinating with the attention to it.
Very interesting. And I think a final point that I wanted to bring up is recently we had more than a number, I think a couple of dozen silver companies went to the Canadian government with their letter asking for silver to be classified as a critical mineral. So I wanted to get your take on that, maybe whether you think that will be successful and whether it is actually classified that way elsewhere.
So I believe there is a handful of countries where it is classified that way. Now, don't quote me on this, but I think it may be in France. I know that it is not in the U.S. There are efforts for that to be considered as well, serious efforts. And I think there's a good chance of it in Canada. The case that's been presented, I've looked at the report and the research that was put together to make the case, and it's really very solid. And, if governments are serious about pushing through and making this green transition happen, and solar is going to become, as forecast, the single largest source of energy worldwide within a matter of a few years, it isn't going to happen without silver. And so, and silver is not an easy metal to find and or produce. And, you know, research tells us, there's a survey by Bank of America of the 13 largest primary silver miners, and asking them where they thought, you know, silver supply was going to be over the next few years. And they said it was going to be flat. It's going to go nowhere from mining. It peaked in 2016 at 900 million ounces. We're right around 800 million ounces. That's 7 years ago. And we're still, and the forecast is that it's not going anywhere. So one thing to keep in mind, and your listeners may have heard this before, but is that 25%, about 25% of silver comes from primary silver units. So that means that mines that actually produce mostly silver, 75% of silver comes from mining other metals. It's a byproduct of gold mining, copper, lead, and zinc mining. So if we get when we get a recession, and if these mining companies decide to pare back on operations or slow down development or whatever it may be, the lack of production of other metals, especially base metals, is going to hit the supply of silver. And it won't matter what the silver price is. It could be $40 or $50 at that point. The product just will not come out. So that'll just exacerbate the price even more. So this is, I think, one of the reasons why, you know, you get silver behaving that way, to get these big spikes, is you get this sort of reactionary action in the price, and, you know, based on what's going on in the market in terms of supply. And of course, there's a certain amount of FOMO as well. So if gold runs, you know, imagine gold at $2,500, let's say. People looking at that and really getting interested in all the, you know, the financial media talking about it, and a lot of the mainstream financial media, because it comes and goes, and they cover silver and gold when you know, things are really becoming interesting, and then it falls to the wayside when it does it. But when it does again, and they're paying attention to gold, and then they start paying attention to silver, and people are looking at those two on the screen, and they're saying, wow, gold is $2,500, silver is $35 or $40. I'm going to buy myself some silver. I'm getting a lot more bang for my buck. And so that just ends up driving it even higher.
Okay, I think that's a very good place to wrap it up, unless you did have any final thoughts, if you want to let people know where they could find you. So
I write a silver-focused newsletter, and to my knowledge, the only available silver-focused newsletter, called Silver Stock Investor. It is available at silverstockinvestor.com. I publish twice per month. I cover the entire space, everything from physical all the way down through royalty and large producers to junior explorers. And I give my macro view every 2 weeks. I cover the technical side of silver stocks in terms of how they're behaving as it grew as well. And then I give updates on all the companies in the portfolio. And when the time is right for new recommendations, I give 4 write-ups, and I give deep dive reviews of companies in the portfolio as well. So you really get a good overview of what's going on in silver. And I do a lot of proprietary research there as well.
Very good. Okay, we'll wrap it up there for now, but hope to have you back to discuss more of what's going on with silver in the future. Thank you so much.
Thank you, Charlotte. Always a pleasure.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Peter Krauth with Silver Stock Investor.